Welcome to the question clip on Chapter 6, dealing with value-added tax. And the question that we're going to be dealing with is the question for IDLS traders. It's 6.7 in your question book if you want to follow. For any question that we face, we first have a look at the required part. And in the required part for 6.7, the A part, they ask us to enter the transactions that have not been recorded in the General Journal of IDLS traders. General Journal reserved for all the omitted transactions or the transactions that cannot be classified in any one of the other journals. And then in the B part, they ask us to prepare the following accounts in the General Ledger of IDLS traders by using all the available information. So that will include the journal entries from the A part. We have to do the VAT input, VAT output, and Vat Control Account. Again, at the bottom, they tell us we have to round off to the nearest cent. So we cannot go over to converting it to rands. We have to put the two amounts after the comma. We're going to deal with the A part first, just to get to the transactions. And for that, we need the framework for the General Journal. If I can just quickly recap that framework so that you don't lose marks unnecessarily. We've got a column for the debits and a column for the credits. And then for each transaction, the account that we debit will be written directly next to the margin. And the account that we credit will be a little bit indented to indicate that it's a credit. They didn't tell us that we could omit the journal narrations. So here we have to write a short description that can serve as a source document for this transaction. So at the bottom, just to assist with knowing what the transaction was for, we're going to include the journal narrations as well. So if we can read through the given information now. The following information regarding the transactions of IDLS traders is available for March 20.2. And then they give me totals of journals for the 31st of March 20.2. This means that the transactions for March, the normal trading transactions, they've already been captured and they provide us with specific columns from these journals and the amounts given. If we can just quickly run through the columns provided, because not in all the cases they provided us with the VAT column. You'll see in this case it's not the VAT column. So we need to know the workings of the journals to determine percentage-wise what these amounts represent so that we can convert these to a VAT amount. So in the debtors journal, they gave us the debtors column. Now in the debtors column, a debtor, if you think about purchasing something on credit from Truist, for instance, you will be charged with the amount including VAT. So in the debtors column, we work with amounts inclusive of VAT. This 6,589.20, therefore, is the 114% including VAT. So if we want to calculate the VAT on that, we'll do that calculation applying the 114%. For the debtors allowances journal, they provide us with the VAT column, so that is 14%. That has already been given as the VAT amount. In the creditors journal, the creditors column, again, when you purchase something from a creditor, they will charge you with the full amount including VAT. So this will again be 114%. And then for both the cash receipts and the cash payments journal, they provided us with the VAT columns. So for these, we will not have to do a calculation, but they are already the 14%. We're only going to use this information once we get to the B part of the required. So now we can go over to the transactions that have not been recorded in the books. To be able to interpret this accurately, we're just going to have a look at the additional information, because here they provide us with a number of items that can assist with the general journal entries. The first bullet, they inform us that the gross profit is 50% on cost. Very important. If you can recall our gross profit markups and the calculations regarding that, we work with our 9 blocks. So we need to determine this percentage over here so that we can apply this in all the transactions above. Gross profit on cost, that means that the cost was the basis, which will be stated as 100%. If the gross profit is 50%, then the selling price in all instances, percentage-wise, will be 150%. So I can now apply this when I do the transactions. In the second bullet, they inform us that VAT at 14% is included in all amounts where applicable. So you need to actually use your judgment and decide whether VAT will be applicable on this transaction or not. And if it is applicable, it is included in the amounts provided. The perpetual inventory system is in use. Perpetual inventory system. We keep track of inventory in the inventory account. So whenever we have a movement in inventory, we have to influence the inventory account in the general ledger. Then the last bullet, the control system is used for debtors and creditors. Control system, we apply the debtors control account in the general ledger with corresponding debtors accounts in the debtors ledger. The same for creditors, creditors control with corresponding creditors ledgers detailed accounts. So now we're ready with all this additional information to start working through the transactions and include the entries in the general journal. Transaction number one of the challenging transactions for a VAT chapter. The owner took goods that could have been sold at 1,419 Rand 30 for private use. Okay, if it's the owner involved, it can either be capital or drawings, and in this case, he took the goods, so we will have an entry in the drawings account. It could have been sold at 1,419. So this is the selling price of the transaction. Before we get to the monetary values and the calculations, let's just complete the debits and credits, and then we can put the amounts in. If the owner withdrew, equity will decrease, so we're going to debit the drawings account. The owner took inventory that could have been sold. So because it's the perpetual inventory system, I can credit my inventory account. And now we also need to bring into account the VAT. Remember our options, we can either include this as a VAT input or VAT output. Now for withdrawals by the owner, these goods would have been sold if the owner hadn't taken it. So SARS would want their VAT as though these inventory items were sold to someone else at a profit. So in this case, this will be a deemed VAT output. Remember, VAT is a tax on goods and services, so we have to focus on what happens to the goods in this instance, and the inventory was taken by the owner, so it's a VAT output. Also, VAT output is something that you have to pay over to South African Revenue Services, so we have to pay over as though the inventory was sold to a third party. Now for the amounts. In this transaction, we will not account for the selling price including VAT anywhere. So you have to start with calculations of the amounts for the inventory and the VAT, and then the drawings will be these two amounts added together. So you cannot start with an amount in drawings. The amount in drawings will be the two separate credits added together. Now let's go back. SARS would want this as though we sold it. So this VAT that we have to calculate here, we have to calculate on the selling price. In the inventory account, however, we only work with cost prices and not cost prices including VAT, because we are not South African Revenue Services. This will have to be the cost price excluding VAT. So I'm looking for the VAT calculated on the selling price and then using that, convert the selling price that was given to a cost price, but a cost price excluding VAT. And once I have these two amounts, I can add them together to get to the drawings. So let's go back to our question. They provided us with the selling price, and in the second bullet it told us VAT at 14% is included. So that's the selling price, including VAT. If I now want to do the calculation of the VAT for this particular transaction, I want my 14% out of a selling price including VAT, which will be 114 times the 1,419 Rand and 30 cents. Divided by 114 times 1419.3, and that will give me the VAT on the selling price, and that is the amount that I have to pay over to the South African Revenue Services, 174.29. I do, however, need to account for the cost price excluding VAT. So to calculate my cost price, I use my 9 blocks, and the 9 blocks that we've identified, for the cost price, it's 100%, profit 50, selling price 150. So in this instance, I'm looking for my cost price, which is 100, divided by my selling price, which is 150. And now I need to multiply this with a selling price. But I can't work with cost price including VAT. I'll have to work with cost price excluding VAT. Into my calculation, I will therefore have to feed not the selling price including VAT, but the selling price excluding VAT, which we calculated at the top there. So if I do this calculation, I will get to my cost price excluding VAT of 830 Rand. Remember, to get a result excluding VAT, I have to feed in the selling price excluding VAT over here and then apply my 9 blocks that I'm used to. If we can then use our VAT calculated on the selling price and our cost price excluding VAT in our journal entry, the VAT was calculated as 174.30, the cost price of 830 Rand, and remember they told you to round off to the nearest cent. That's why I have those commas there. And then these two amounts added together is the drawings. The decrease in equity is not only the cost price, but also the VAT that we have to sacrifice to SARS as a deemed VAT output. And your journal narration. A short description. Transaction number 2. A credit note received from Nation Supplies, a creditor, for goods returned. The cost of the goods was 900 Rand, and I just added here excluding VAT. So the cost of the goods excluding VAT was 900 Rand that I returned. Because I already entered this in my books, I can be aware of the cost excluding and the cost including VAT. Okay, if it's a credit note and I returned, the original transaction regarding a creditor will result in a VAT input. When you purchase inventory, the inventory entered into your entity, so it's a VAT input, something that you can claim back from SARS. That was the original purchase transaction. If I now return the goods, I cannot claim that full amount back from SARS anymore. So I have to go and cancel the claim, the VAT input. So this will now not all of a sudden turn into a VAT output. This is a cancellation of the origination of the transaction when I bought from the creditor. So I will have to influence my inventory that I returned, my creditor, and my VAT input account. If this is the amount excluding VAT, I need to calculate the VAT as well as the price including VAT. Now, if I want to get to the VAT, that will be 14% out of, if this is a price excluding VAT, the amount that was provided will be 100% times the 900 Rand. 14 divided by 100 times the 900 Rand, and that will give me my VAT of 126 Rand. The 900 plus the 126 will then give me my amount including VAT of 1,026 Rand. So let's do the journal entry for these amounts. Credit note for goods returned, so your inventory will decrease, and inventory decreases on the credit side. So remember indentation for credits, inventory. I will owe the creditor less, so there will be a decrease in my creditor's control, slash the name, because they told us about a control system, nation supplies. And then because the creditor will get the full amount including VAT, my inventory will be the cost price excluding VAT. I need a corresponding credit in the VAT account for this whole transaction to be in balance, and we already discussed that this is a cancellation of the VAT input that you claimed back with the original purchase, but because of the return, you can't claim it back anymore. So this is goods returned. My VAT input amount was calculated as 126 Rand. Cost price excluding was provided as 900, and therefore my creditor will decrease with the full amount including VAT. Transaction number 3. The bank returned an RD check of 600 Rand. The drawer of the check is D. Sparrow, a debtor, who settled his account of 657 with this check. Important, we've got two values here. One is for the cash, because it was the check that was returned, and the one is for the full account of 657. So I'm actually left with a 57 Rand difference between these two amounts, and that is the settlement discount that I granted. Now, of these amounts, only certain amounts will have an effect on my VAT. Remember, VAT is a tax on goods and services and not a tax on money. Therefore, this amount that you received from the debtor, when you sold to the debtor, you promised an amount of VAT over to SARS. When he comes and he pays, you are not going to pay an amount of VAT on the cash amount again, because that will be duplicating the liability to SARS. Therefore, the cash part of this transaction had no VAT implications when I accounted for the receipt of the money. The discount part, however, the 57 Rand, would have had a VAT implication. Just think about this. When you sold to the debtor, you promised VAT to SARS based on the full amount of 657. Now, if you do not get the value 657, but you allow settlement discount of 57 Rand, will you be willing to pay something over to someone else that you do not receive? That's why on the settlement discount part, we're going to take back the part of the claim that SARS has got on the selling price by means of reversing VAT on the settlement discount part. So in this transaction, only this 57 Rand would have a VAT implication. Okay, let's quickly debit and credit before we do the calculations. If a check was returned, the debtor will owe you that amount again. So we're going to debit the debtor's control, increase in assets, / the name of the debtor, the Sparrow. Then we have to cancel the cash part of the transaction, the bank. We also have to cancel the settlement discount granted. And because when we granted the discount, we took back on our promise to SARS, we now also have to cancel the VAT on this transaction. Now for a debtor, when we sell to the debtor, the inventory left the entity, so that would have been a VAT output. We have to pay that over to SARS because we are sitting with the money. So any transactions after that original sale will just be an adjustment of the original VAT output. Okay, now we're going to use the amounts that was provided. They told us the check amount was 600 Rand, so for bank we can only use the 600 Rand. The full account of the debtor was 657. 657 Rand over there. And now the 57 Rand discount that we calculated. That 57 Rand discount is not only for our account, but it also has a VAT implication. So I will have to split this 57 into my part, which will be 100 out of the 114 of the 57, and that will influence my VAT return. 14 out of the 114 of the 57. Why do I have 114 at the bottom? If this 57 is the difference between debtors and bank, remember in debtors I work with prices including VAT. So that 657 was including VAT. If I then deduct the cash from that, the 57 is also inclusive of VAT. That's why the 114 is at the bottom. 100 divided by 114 times the 57, and that will give me my 50 Rand for settlement discount, and the remaining 14 out of the 114 of the 57, and I have credits adding up to my debit. Transaction number 4. A debtor, V. Lazy, was declared insolvent. A check is received for 1,320 Rand, which represents 80 cents in the Rand of his debt. The balance of his debt must be written off. Now again, we have two parts to this. We have an amount received and we have a balance that must be written off. So let's quickly calculate this balance that has to be written off. If the amount received is 1,320 and that represents 80 cents, remember what we want divided by what we have. They provided us with 80 cents, so that's going to be at the bottom. And we want to calculate the balance of 20 that we want to write off. So 1,320 times 20 over 80, and that will give us, let's quickly do our calculation. That will give us 330 Rand that we want to write off, that we're never going to receive it. Of these two transactions, the 1,320 and the 330, only one will have an implication in terms of our VAT return. The cash part of a receipt, because VAT is a tax on goods and services, that will not influence the VAT at all. So if we can account for that receipt of money, if we receive money, we debit bank. And we will credit the debtor because he will not owe us that anymore. The name of the debtor, V. Lazy. And the 1,320 will not have any implications on our VAT. We do now, however, also have to account for the 330 Rand that we're not going to get back from the debtor. So we will include that as credit losses. The debtor will owe us less because we're going to write it off. But now, will you again be willing to pay something over to SARS that you are not going to receive yourself? We're writing this off as irrecoverable. And because of that, we have to write back a VAT based on the original transaction. And for debtors, it would have been a VAT output. So the debtors control will get the full amount, including VAT. I then have to split this into 100 out of the 114 for my books and 14 out of the 114 for SARS. So it will be 14 out of the 114 times 330, 40 Rand 52. And the balance will then be for my account. Can you see the cash part? No VAT implications, but the amount that we're not going to receive, we cancel our VAT output. Transaction number 5, we're almost done. A check of 1,200 issued to a creditor B boss in settlement of his account of 1,428. Again, we have the two amounts here, and the difference between these two amounts, the 228, that is settlement discount that I received. So originally on the account, I claimed back VAT based on the full purchase price, including VAT. Now I get this amount as settlement discount. So on the cash part, there's no VAT implications, but my claim for VAT input from SARS will now have to be adjusted with the settlement discount. If I split that 228 into the 100 for my account and the 14 for SARS, that will give me 200 Rand settlement discount and 28 Rand for VAT. If we account for this in terms of debits and credits, issuing a check to a creditor will make our liability decrease. So we're going to debit the creditor's control. And the name of the creditor. I'm going to credit bank for the cash part of the transaction. Then I received settlement discount. And of course the VAT. On the settlement discount, for creditors it would have been VAT input. The full account of 1,428 will decrease my creditor. Of that, only 1,200 was cash. And then the 228 that we split into 100 out of the 114 and 14 out of the 640. In the last transaction, they tell us that we paid the VAT of 688 that was outstanding on the 1st of March. So our previous VAT cycle, we owed SARS 688 Rand, and now we settle that. So if we settle, we're going to credit our bank account. And of the 3 accounts that we can use for VAT, VAT input, VAT output, or VAT control, the VAT control account is the account where you determine whether you owe SARS or they owe you. So we will pay this against our VAT control account. 688.